240. What are those things? Where? No. Please tell me the aggregate figure. Don't tell me individual. I can remember. 96 by 0.4 is 240. What are the things I have charged but not allowed by the taxation authorities? So you have to keep in mind, you have to keep in mind this statement of comprehensive income and the tax expense calculation. $240 are you getting from 3 figures? Huh? Very good. Yes, stand up please. Please stand up. Who got? Look at the PL I have debited and that is not allowed in income tax. First thing you see, that is impairment, 150. You know what is impairment? I suppose you know. Impairment, any idea? I hope you know. Yes or no? Yes, please.
The asset is not what is valued, what is presented in the balance sheet. Impairment.
How do you work out? How do you work out?
The present value or the actual market value of the asset is not what is being presented in the balance sheet. It is much less. It is less than the carrying amount. Less than the carrying amount.
First thing is, depreciation is not depreciation, it is accounting amortization. We do not know by what amount actually the depreciation took place in a particular year. That's our guess. Every year we change what? Estimated. Because depreciation itself is an estimate. Amount of depreciation you work out from 3 figures. Cost of the asset, the only thing that is known with certainty. Estimated, underline, useful value. Estimated useful scrap value, estimated useful life. So out of the 3 figures, if 2 things are pure estimates, the resultant thing has to also an estimate. Impairment, cutting a long story short, is simply adjustment of under depreciation. My asset, particular asset or a group of assets appearing in the books at 100 rupees. I have 2 possibilities of the measure. First measure is what? That 113 yesterday what Binaji told us. That I see the market, what is the fair value less cost of sales. Then I see what? Another way, that how much cash will be generated, positive cash inflow at its present value. One asset is not an asset on the balance sheet date, it is future asset. One liability is not a liability, it is my future obligation. So that asset, how much amount it will generate. So one is confirmatory value, I told you earlier. That I confirm this is the fair value less cost to sales. Another is predictive value. I predict that this will fetch so much of cash inflow. What is the net present value of that? Higher of these 2. If it is more than the carrying amount, bring it down to this. So it's a loss. That means depreciation previously undercharged. Now remember, when there is impairment, what? One expense that is charged in the PL is not allowed by taxation authorities. They have their own depreciation calculations. They don't understand what is impairment. Income tax does not understand, not they bother to inquire that it is legal income or illegal income. Once smuggler caught, first to clear your income tax dues, then you go to jail, there nothing to do. So when there is impairment, there is one deferred tax asset. When there is impairment, there is, because I debit one expense which is not allowed by the taxation authorities. So first item is 150. Okay? Yes, please.
Can you explain those 3 figures?
Which one?
Amortization of tangible assets is 60.
Amortization of?
Intangible assets. First.
Which one? Current tax. That I am coming. Wait. I am talking about this 96 How does it come? Deferred tax income. So 150 is my impairment of PP. Second is what? When I make a provision, it affects my accounting profit. Does it affect my taxable profit? No. If they allow, I will provide only provision, 100% depreciation, 100% bad debts, okay? So when you create a provision, it affects your accounting profit, not taxable profit, okay? When you pay for the provision, suppose you have created a provision for warranty, set 100 rupees. It affects your accounting profit but not taxable profit, okay? Now when you pay for that, does it affect your accounting profit? No. Provision debit to CAT, it's a balance sheet item, but it affects my taxable profit. So another, how much you add this provision created? Short-term provision? 70. That means how much? 220. Now, your thing, sir. Your thing. Intangible amortization of intangible assets. You have charged 60 rupees. What is the amount allowed? 40. Because they add back how much? 20 rupees. So 220 plus 20 is 240. 40%, 96. Yes, please, before I go ahead.
Yes, look at 40 is allowed.
Huh? Yes, please.
It's an assumption that 40 is allowed out of amortization.
You have charged 60, they are adding back 20, that means they are allowing 40 rupees. 20 they were not allowing. So my expense charged in PL, what is not allowed by taxation authorities, that is 150 plus 70 plus 20, 240. Okay? Is it okay, sir?
Yes, that is just an assumption.
What assumption? No. I have debited 60 rupees, income tax allowing 40 rupees, 20 they are adding back. Biggest problem is corporate world will face, I tell you, that nobody can say I am in account department, I am in income tax department. One need to have at least thorough knowledge of profits and gains of business process and also capital gains. Because there are so many things, weighted average tax, I mean deduction, all these things. You pay 100 rupees, you are given deduction of 133 rupees. So at least we have some idea how it affects my PL. Because without this, my EPS will be wrong. And deferred tax liability I create that does not necessarily mean it is my obligation to pay. Deferred tax that I created in PL, yes, my obligation, I have paid less tax. Ultimately, I will be allowed 100 rupees depreciation if I buy one asset today. If I charge 20 rupees, 5 साल में खिलाएगा वो तो 4 में बोलता जाता है. So I pay less income tax according to my calculation on actual basis. But when I talk of this OCI, it may or may not be a payment. It just may be a book adjustments. Because when I revalue an asset, there is one revaluation surplus. So can I make any profit out of that revaluation? No. My profit will go down definitely because of extra depreciation. But the same amount will go where? To my retained earnings, what is the surplus? The effect is the same. My net worth will not change. My EPS will change. This is the biggest problem faced by ICDS and this proposal for MAT, this Lohia committee. Because I am charging what? One notional amount. Because I have revalued my asset. My profit is going down. Just one book entry. But no change in net worth. By making one revaluation, you can't make it profit. So revaluation arising out of, deferred tax liability arising out of revaluation, does it a liability for payment? No. So they say that you will have to make one separate disclosure. Deferred tax liability arising out of PL, arising out of OCI, arising out of state pension equity, and how they are reversed also. Any question up to this? I want to listen for some time. Anybody, please. Huh? একটু দাও সুরাপান করি না আমি চলো
Tax laws don't remain uniform.
Huh?
The tax laws don't remain uniform. They change every year. Suppose I have created some deferred tax liability, which is not payable later due to some changes in tax law. So what is to do?
amount will change. Amount will change. Deferred tax liability will change. New rates are enacted. So amount will change. That first problem, you have this first problem with you? 5 years, yesterday's first problem? Handout given yesterday. The first one?
They had left that handout at home.
No, it's all right. Yesterday's first problem, okay? It is for 5 years. Assumption was income tax rate is same for this. You take for the last 2 years, income tax change from 40 to 30. And you see your tax expense coming on actual basis. How it is coming? You think a while. If it is not clear, send an email to me. I'll send you the example. I answer all queries, no doubt. For education, my worst enemy is most welcome to me. This will be there definitely. You have 3-4 amalgamation merger outside India. There are 3-4 different tax rates. You have to prepare on ecosystem. It will not at all be on actual basis. Acha. Now you tell me, how does this 60 rupees come? Deferred tax expense 60 rupees. How does it come? 60 divided by 0.4 means 150. Huh? 60 divided by 0.4. That means taxable temporary difference of 150. Can you check up? I have charged 150 rupees less in my PL than what is allowed as per income taxes.
Intangible asset was 120. Intangible asset last year it was 120. Now it is 40.
Intangible assets already taken care of. It was a part of deferred tax asset. That's over.
Depreciation of PP.
Depreciation of PP. How much I have charged? 600 rupees. Okay. And how much is allowed by income tax authorities? 800. So that means 200 rupees deferred tax liability. 200 rupees is the difference between these two. 600 I have charged, amount allowed 800, difference is 200. So I have charged less than what is allowed. So 200, 40% is 80. But here is 60. Why? This is because I had previous one deferred tax asset. That is cancelled. You see, deferred tax asset 20. That's why I have put there 80 minus 20, that is 60. Blackboard, whiteboard. Can I use this? I mean, huh?
Yes, yes.
This 20 not clear. Definitely, I'm sure not clear. हमारा भी clear नहीं है, तुम्हारा clear कैसे होगा? हाँ?
That goes there. That goes there.
Sir, you are telling a wrong person. इसको का सुन नहीं पाता है, मेरा कुछ है। हाँ हाँ young क्या है? ट्रेन को लाने दिया है।
You can use the Excel in the laptop itself.
हाँ?
Use the Excel in the laptop.
I am not that confident. We need people like this in our country. You see, on its own he can.
All side.
Back ले जाओ ना। नहीं एक
The reversal of the existing thing. अरे थोड़ा इस तरह
White board pen.
थोड़ा सा can they see? But we would have better than there. I don't think they see. Huh? Would have been here. Okay. Make sure I don't fall down, huh? Ah. You have one corporate governance report. What is that? That is our faithful representation. What we are talking about in conceptual framework. That is trust. What is trust? Arjuna and Krishna, they are walking. Now Krishna said, "Look, Arjun, is that dove?" Arjun said, "Yes, it's a dove." After some time, the bird came down. Arjun, see, it's an eagle. Well, yes, it's an eagle. After some time, the bird came down. Arjun, no, what nonsense. Look carefully. It's a vulture. Well, yes, it's a vulture. Krishna got annoyed. Arjun, why don't you contradict? You trust me 100%. Why? Why you avoid doing what I say all the time? You must have. Master, come on.
That's it.
Lost the remote.
Take it and please.
You should have your own judgment. Why do you abide by? Why do you trust me so much? Arjuna said, your words are much more powerful than what my eyes tell me. Your words are much more powerful than what my, that is corporate governance report. Better to reach one thing. Sure, lagi?
check it.
এটাকে একটু বন্ধ করা যাবে বন্ধ এক সেকেন্ড yes asset 100 rupees okay carrying amount tax base 100 first year I charge depreciation 20 taxes 25. So carrying amount is 80, carrying amount 75. It is deferred tax liability or deferred tax asset? Deferred tax liability or asset? Deferred tax liability, how much? 40% income tax rate? 2 rupees my deferred tax liability at the end of year 2. No problem. Okay? Next year I charge 40 rupees depreciation. What is the carrying amount? 40. Income tax no change. 50. How much is this? Deferred tax or deferred liability? How much? 4 rupees. So for this difference I need to create one deferred tax asset of 4. That means I need to cancel this. Yes or no? Yes. ये को दाई डास्टर नहीं? ये वाला क्या? Eraser? Up to this no problem I suppose. Okay? I prepared the PL. My profit before tax is 100 rupees. Okay? I charge depreciation 40. How much is coming? 60. Accrual basis, it should be how much? 24, 40% tax. What is the current tax? Current tax is 100 minus 25, 75, 40% is 30. Current tax is 30. Deferred tax expense created how much? Current tax is 30. Deferred tax is 4. And previous thing is cancelled, deferred tax liability. 2. 40 minus 4, 2 is 20. See this. I tell you again, you need a lot of practice.
Sir, how this OMP is
One is asset and one is liability.
I need to create one deferred tax asset. Yes or no? How can you create one deferred tax asset in statement of profit and loss? Deferred tax asset debit to deferred tax expense. Minus 4. And existing deferred tax liability is removed. For 30 minus 4 minus 2. You just do one thing as a practice, do the opposite thing. You make it 25, make it 20. Here you charge left and then this. Same thing will come. Huh? 100 minus 25 depreciation as per income tax, 75. 40%, 75?
30.
30.
But DG is positive 4 now. Why negative 4?
What is the entry? Deferred tax asset debit to deferred tax income. Deferred tax income debit to tax expense. See this profit and loss account, you see this? Deferred tax expense increases, decreases my profit. Deferred tax income increases my profit. When they reverse, they follow reverse rules. बस ठीक है right. चलो नीचे नीचे ना আবার লাগলে আমাকে দেখা যাবে না বাবা so want this thing to be there goodbye so can I go ahead huh what is said we can have more classes something like that I have heard huh so I wish we can meet again for my own satisfaction okay because acha first to tell me you are here for me I am here for you huh tell me why sir हाँ पता ही है हाँ पता ही है
Made for each other.
अच्छा you अच्छा I am for you why tell me because you want to learn huh and you are for me why because I want to relearn to teach is to learn twice there is no end
Demystify the Indians.
because I am a mystified person I have tried it's my endeavor you see but it will you need to take some pain sir it is I mean you might think understanding and doing anger control is not that easy you need practice you will be blind to people's mistakes yes sir go back to first page property plant and equipment 2250 can you reconcile the opening and closing balance becomes 1850
Yes, got it.
Got it? All of you? 2250 minus depreciation 600 minus impairment 150
There remains 1500.
plus 240 devaluation plus addition 110 from the cash flow statement okay now You see, in OCI, look at OCI, other comprehensive income. Items that will not be reclassified subsequently to profit or loss. And one more thing given in bold, items that may be reclassified subsequently to profit or loss. What does it mean? That if I make a gain, suppose, I have one asset 100 rupees that becomes 120. And now I sell it for 120. 20 is my gain. So 20 I will take to PL, or I ignore PL, I take it to retained earnings. There are two things. If I take it through PL, it is called reclassification adjustment. This is very, very important for calculating EPS. When the math thing will come to you finally, this is the only thing that you will not be able to understand there. So if you understand what is degree adjustment, it will be very, very clear. Have you seen anybody this Matt Lohia committee's report? Any of you? Huh? So I was asked, anywhere I take classes on this for corporate, this says that any effect of Ind AS 12 or MAT, Amla na, effect is only on Ind AS 1. So if the profit on other comprehensive income, what was recorded initially as unrealized, if it is subsequently realized, the profit may go directly to retained earnings or it might go through PL. Now, there are certain items which can be reclassified.